All right, guys, we are here today. Honestly, the market's bouncing back a little bit, but markets around the world have been crashing down some over the last 48 hours. Overseas, markets in a lot of places are down, been crashing down some over So yesterday, the Chinese stock market fell 10% at the opening bell. Let me know if the music's good. It should be pretty good. Yeah, we honestly bounced back a lot, though. One of the things I saw, so apparently some stocks are 24/7 on TOS yesterday. I looked at some stocks last night, and you could see Tesla, Google, Apple, a bunch of other blue chip stocks that are actually open on Sunday, which is very strange. It was after 8 o'clock on Sunday. You can kind of see Nvidia hit $83 a share, dude. That's so low for Nvidia, though, man. $83 a share. It's back up to almost 90 or over 90 at some points today. Tesla hit 208 a share. The Nasdaq hit 16.5s a share. So the crash has effectively happened. Let's take a look at percentages here right now. I want to look at percentages from this. All right, so the Nasdaq hit highs of 22,450, hit lows basically earlier this morning or late Friday or yesterday. The Nasdaq hit lows of 16,460. Chaotic lows, man. That's low. That would make it a 27% drop in the Nasdaq. 27%. Let me know what you guys think happens, man. Kind of chaotic here, of course. Kind of chaotic. We're starting the stream a little bit earlier than we normally do today because of this. But, yeah. Jamie Dimon says tariffs will increase inflation, likely cause a recession, and should be, quote, unquote, resolved quickly. Now, the president's pushing for rate cuts. Let's take a look at the rate expectations. It's something I do want to see right now. I want to see how the rate expectations are changing. I do want to see how the rate expectations are changing. It's almost 50-50 split here. Here's the rate likelihoods. You can kind of see still pretty 50-50 split. We're 45-55 right now. 45-55. In terms of rate expectations for next month in May. We still got almost a 50% chance of a cut, 55% chance of a pause, 45% chance of a cut. So it's still in the minority likelihood that we're going to cut rates next month in May. But it depends on what inflation shows. Later this week we have the CPI inflation report. That's a really important metric regardless of what anybody says. CPI inflation is important, and that drops Thursday, and then we have PPI inflation Friday along with a bunch of other stuff too on Friday. So y'all hit that like button. Tesla all the way down to 227s. Nvidia at 91s, man. Is it time to buy? I guess is the question. I asked people this morning, does the market crash continue into the opening bell today? 78% of people say yes. 22% of people say no. We got Palantir at $69 a share. Apple at 183s. Google at 145s. Tesla at 227s. Netflix all the way down to 800 a share. 844 right now. Meta at 493. Microsoft at 350s. All right, and the president made this big, long post. He said, and I'm going to kind of paraphrase it really quick. He said, oil's down, interest rates are down. He basically said that the Fed should cut rates, food prices are down. He said there is no inflation, essentially. He said the U.S. is bringing in billions of dollars a week from countries on tariffs that are already in place. This is despite the fact that China markets are crashing down, and they just raised its tariffs by 34% on top of its long-term ridiculously high tariff. Yeah, I mean, it is what it is, you know. Yeah, a lot of people are arguing that it's time to go up in markets, guys. It's time to buy. I don't know. I don't know if it's time to buy. Jim Cramer says now is not the time to panic. End quote. Jim Cramer. $1.35 billion were liquidated from the crypto markets in the past 24 hours. Bitcoin currently sitting in the 70s, 77,410. I mean, Jim Cramer saves the stock market by predicting black money 2025, and now the stock market has rebounded essentially since he said that. I mean, honestly, it's kind of crazy, you know. Did he really? President says he's not interested in negotiating with Europe over the tariffs, and that he will not be lifting them, quote, unless they pay us a lot of money on a yearly basis, number one, for present, but also for past. Well, it's not anybody. It's hard to blame it on anybody. Music is good? All right, cool. Yeah, so the Nikkei circuit breaker. Or the Nikkei, I'm sorry, I always pronounce it wrong. The Nikkei circuit breaker. Yeah, I mean, we don't know how long this is gonna last. Just be careful, guys. Just really be careful, to be honest. It's a crazy time. It really is a crazy time. Yeah, I was gonna go to jiu-jitsu early this morning too. Like I really was. I was gonna go to BJJ early this morning because they have like a 5 a.m. one, and I was gonna go to that. But because we had all this craziness happening, because we have the chaos of the markets today, I ended up staying home and just streaming early like I should be probably. Sorry, I'm watching something. It's how different countries do math. The base method. Oh wow, that's actually a pretty easy way of doing math. Hold on, let me see if this actually works here. Okay, so if I have... Hold on. If I have 96 times 95, use 100 as a base, and then you just switch them around and paint the number. Okay, hold on, let me read this. Hold on. And so 100 is the base. Hold on. Sorry, okay. Hold on, guys. I'm trying to do this math the way they did it on screen. Hold on, I've never seen this way before. Alright, so this would be 4, and then this would be 5. So the first step would be doing... I'd be doing 96 minus 5, which would be 91. So I guess we put 91 here, and then I don't know if I'm doing this right. Sorry, I'm seeing this different way to do multiplication that they say the Chinese use, but I'm trying to figure out how to do it. Hold on. And then I would guess I would do 5 times 4. So it would be 20. Would it be 9120? I don't know what the answer to this is. No, it wouldn't be. Oh, hold on. Oh, it would be 9120. Okay, that's right. Wow. Okay, so that is correct. All right, so they do some weird different multiplication. I'm sorry, guys. I got distracted. I really wanted to test that. It is 9120. Very interesting way to do math. Like, you could do it in your head. You could do multiplication in your head this way, which is very interesting. Anyways. I think this is a selling cool off since futures opened down. So many opportunities. Oil, I'm assuming oil is down as well. Here's the Nasdaq on a 4-hour chart here, chat. Nasdaq on a 4-hour chart. You know, obviously this is a big massive dip in the Nasdaq. Big massive dip. Let's look at oil here. Here's oil. Big massive dip in the NQ. Honestly, a lot of stuff's down. Here's oil. Oil is honestly rebounding a little bit this morning though. Still red on the day, but down nonetheless. The SPY itself, again, opened up really low and kind of rebounded back up. You can see the previous closing price on a lot of this stuff here. Here's 505. So here's the previous closing price. We're at 496 on the SPY. So we're really not far away here, guys. So we're really not far away from, you know, some of these spots. We're really not that far away. Yeah, so here's the SPY. Here's the QQQ. Just to look at the previous closing price. So here's where we closed yesterday. Is this yesterday or is this? Okay, so this is where we closed Friday. So honestly, the market opened up really red, but we're kind of rebounding back up here, to be completely honest. We're kind of bouncing back some here, chat. $500 is bad resistance. And what? 500 and what? SPY, I'm assuming, right? Because that's a big whole dollar level. Yeah, I mean, that's probably what you're talking about is the SPY. Yeah, 500, big psychological level. It's kind of like the NQ when we have, you know, 17, 18. 16.5 is the big level in the NQ now. This is the low of the last 7 months now for the Nasdaq. I think it's the low. Or 16.460 actually is, but it's basically 16.5 is what we're looking at. It looks like we broke underneath it. Yeah, so it's basically 16.5. If we look at 16.5 and we extend it to the left here on the NQ, this is basically what we're looking at. 16.5 is that level. The actual low is a little bit underneath it, but we will paint this a different color. Here we go. And of course, that's the big level. Now, the big question today, of course, is does the market hold? What does this look like in markets today, chat? Like, where are we looking like today? I'm not expecting anything to happen here, guys. I'm really not expecting anything to happen. I really don't know what's going to happen. I think we're already down 26% in the Nasdaq, 26%. So whether you want to consider this a crash, correction, pullback is all in the mind of the beholder. I'm not sure. Yeah, Microsoft at 355. So we got a lot of pullbacks here. Is there any way for me to look up the Nikkei? I heard the Nikkei is not doing great. Is there any way for me to look up the Nikkei in the US? Okay, yeah, I can actually. NKD. Do I have to put a... Okay, yeah, so here it is right here. Yeah, so you can look at the Nikkei. All right, so here's the Nikkei right here. You got to put /NKD. Here's the Nikkei. And the Nikkei, honestly, has bounced back a lot as well. Here's where we opened up this morning, right here on Monday. So we opened up this morning yesterday on Sunday. And honestly, we crashed down early this morning, 2 a.m., 3 a.m. We had a big dump. Now we're honestly kind of bouncing back some here. So we kind of rebounded all the way back up. We're kind of right where we opened up yesterday in the Nikkei. So not the, like, end of the world here. Yeah, it's not the end of the world. Is it time to buy, though? Here, chat. Let me know in chat right now. Is it time to buy? What do you guys think? Is it time? Is it time to buy it right now? Yeah, I'm trying to look up any reports we have today. We don't really have any big reports today. One of the interesting things, though, that we do have We got CB employment trends index. Not really the biggest thing. We got 3 6-month bill auctions coming live at 11:30 this morning. Outside of that, today's pretty slow. We got the Fed minutes report this week. I completely forgot about that. We got the Fed minutes report. Fed minutes report is going to be a Wednesday, 2 p.m. We got Kugler speaking at 10:30. We'll see what that looks like, but just be careful. We got CPI inflation data. Honestly, Thursday's the biggest day this week. Thursday, we got a whole bunch of stuff. We got jobless claims. We got CPI. We got Michelle Bowman. We got Kansas City Fed President Jeff Schmid. We got Philly Fed Patrick Harker speaking. We got Goolsby speaking. Friday, we got PPI inflation data and Michigan prelim consumer sentiment. The Michigan consumer sentiment data on Friday is going to be really interesting as well. So it's a busy week as well. The busiest parts of this week are going to be Wednesday, Thursday, and Friday, though. Yeah. Yeah, so it really is a situation where a lot of people thought the market would crash this morning. Like, a lot of people thought the market was crashing, and honestly, I kind of did too. At this point in time, the market's starting to rebound back, though. So markets everywhere. Again, we looked at the Nikkei right here, which is on the right side. You could also take a look at gold. Like, here's gold. Gold is currently at 3060s. 3060s. We got 22.85s here as this low of the last, like, how low is this? Last year for gold. So gold is up a very large percentage. Gold is up almost 50% on the year. But gold is honestly dipping down some in a market where a lot of people thought gold would be moving up. And it's up a little bit today, but not as much as a lot of people expected it to be, you know. How many Fed rate cuts are expected? Let me see. So, like, Fed rate cuts. Yeah, so it's still 40. Let me see. Actually, hold on. Did this change? Hold on. Okay, guys. So this actually pivoted here. So this is actually big news right now, guys. So listen to this. Okay, listen to this. Right now, it is actually more probable that we are going to cut rates in May. It's actually more probable that we're going to cut rates in May for the first time I've seen in a long time. So it looks like it's pretty probable we're going to cut rates in May now. Like, look at this. So 53% likelihood of a cut in May next month. 47% likelihood of a pause. So this pivoted back, or this changed. It moved back. Again, it was once... Just 10 minutes ago, 15 minutes ago when I checked this was 46% likelihood of a cut and 54 likelihood of a pause. So this has switched recently over the last 10 minutes. The president was speaking. But yeah, now it is actually more probable by the CME Watch tool that we are going to cut rates in May now. A rate cut in May is more probable now than a pause, which honestly, I think it's probably a good move. It's probably a good move. I do worry about inflation, but I think with everything going on right now, we can go ahead and cut at least one more time. Now, looking at into the future, if we look at June, so it's going to go May, June. If we're looking at June, 54% chance likelihood of only a 25 basis point cut by May and June, right? So May and June combined, they're thinking 54% likelihood that we're only going to have a 25 basis point cut. There's a 45% likelihood of 50 basis points being cut by June, and a 1.4% likelihood of 75 basis points cut. It's pretty improbable, but that could always change. Again, this is what's going to happen here, guys. So if you want to know how to, like, read the recipe for what they're going to do, I'm drinking my coffee. All right. If you want to listen to what the probabilities are, or how probable different things are, this is what you want to watch. Watch CPI inflation this week. If CPI inflation comes in hotter than expected, right? Right now, what is CPI inflation? CPI is expected at 2.5% year over year. If it comes in at 2.5, that's a decrease. Like, that's a decrease. Last time it showed up at 2.8%. If CPI inflation shows up at 2.5%, they're only expecting 0.1% month-to-month increase versus 0.2% last time. If this just comes in as expected, a rate cut is going to be even more probable next month. Even more probable, because one of the things the Federal Reserve does is that they do not want inflation fears if they're going to cut rates. If inflation is a fear, if they're worried about inflation spiking, or if they're worried about inflation running out of control, they do not want to cut rates, because cutting rates might make prices go up even more, because people are going to have cheaper access to money with leverage through lower interest rates, and that might cause people to spend more and prices to go up higher. And so the Federal Reserve is only going to want to cut rates if they have the correct market dynamic and economic dynamic with inflation to justify it. And so if they have lower inflation, if we show up as expected on Thursday and Friday with PPI, if we show up as expected at 2.5% for CPI inflation, it's pretty probable, in my opinion, that they're going to cut rates next month in May. Now, we'll see what the market looks like and then. But yeah, we'll see what the market looks like then. But it's pretty probable that if we get reasonable inflation data, that the Fed's going to cut rates. That's how it goes. Do you think that's a good idea, chat? Yeah, most people are saying the music's fine, so y'all will be okay. Is it time to start DCAing into this, chat? Yeah, I mean, listen, you get people, like, you know, insulting me as a trader and all this stuff. The reality of it is I am flat right now. I cut my positions in December, chat. I am literally flat right now, and I've been flat, and I've been telling people this for a long time. And again, it feels good, man. It feels good. Like, I was able to get out before any of these drops in markets. I told people I thought the market might correct soon, and we were absolutely right about that. And I'm very, very grateful that I was able to recognize that. And yeah, market's flat, or my portfolio is flat, and it has been flat for the last few months. And so it's important to recognize that people have been asking me whether it's time to start buying. And I kind of told them the truth last week, which is not yet. Like, I'm not interested in buying this up yet. And I'm still not really interested in buying it up yet. I think I think there's certain areas where if you buy up in DCA over the next 6 months to a year, you're probably going to be fine. But I'm not an investment professional. I'm not liable if you lose. And I genuinely have no freaking idea what the market's going to do. As I say over and over again on this stream, I have no freaking idea what the market's going to do. Not investment professional. But I'm just very glad I got flat in December. You know, market was up 105% of the time. The reason I got flat is because the Nasdaq, up 105% at the time, was just up way too much on a 2-year basis. It had gone up too much. The market had done crazy things. I was green on the year, and I just felt the need to protect some of those profits. And we were absolutely correct. Absolutely correct. So I'm just glad I was able to get flat. I haven't really started buying up anything, as I've told people a million times. Not really interested in buying up anything right now, and that seems like the good move here. But again, with that said, I have no freaking idea what you should do. Be smart, be safe. All right, so Jamie Dimon says stock prices remain relatively high even with the recent market sell-off. Yeah, I'm looking at some other stuff too. I've been looking at Truflation all morning. So Truflation in the US, it's at 1.46%. We'll see if this changes. PCE expected at 2.5. Producer price index expected at 3.15. U.S. inflation expected at 1.46 versus a year ago expected at 3%, 3.05%. Versus a month ago expected at 1.37%. inflation is up because since 2020 we have printed 40% of US dollars. Does anyone know this? Yeah, I mean, that's probably true. Yeah, man, again, the Nasdaq was up 105%, and the reason I got out in December, at least what I explained it at the time, was that I see a mania of buys and bulls. Like, bulls were too manic, you know, like people thought the market couldn't crash or correct. You know, they thought the structure had changed enough to where a crash or a correction couldn't happen, and obviously in hindsight that was not true at all. And then again, I've been very slow to start buying back in. You know, a lot of people have kept asking me, hey, are you buying back in? Hey, are you buying back in? And I kept telling them, no, I'm not. Like, I am not interested in buying right now. Like, I need more confirmation first. And by confirmation, I do not mean just one good green day. Like, that doesn't mean anything. The market is not going to go straight down. I see people asking me, hey, why is the market bouncing back? And my answer to them has been because the market doesn't go straight down. Like, it's not going to go like this. It's going to go like this. You know? And so with that said, you're going to have small little green days mixed in with the red, but I'm gonna need sustained green action before I start buying back into stuff, and I'm just gonna wait. I'm just not interested in doing that yet. All right, guys. Yeah, gold up, Nvidia up. The Japanese Nikkei is back up too. So everything's kind of bouncing back here, but we're kind of in this consolidation period. So basically what happened, chat, is we opened up low, and then we rebounded back up, and now we're at this level here. So we opened up low, dropped all the way down to 16.5s, and now we are back up to, here's the previous closing price from Friday. So we're still under that. We're still red relative to Friday, but we have rebounded, consolidated, and now we're sitting here at this kind of 17,000 level on the NQ. And we'll see what happens. Fun market. Honestly, really good for me as a streamer. You know, we got 700 people here before 8 a.m. in the morning, so really good for me as a streamer. With Jerome Powell, we had over 5,000 people watching. We got like almost 40,000 views for Jerome Powell on Friday, so shout out to you guys. Appreciate you guys joining me here, helping support the channel. We appreciate it. Nikkei, right? Yeah, I say it. I say it wrong every time. I'm sorry. Yeah, Japan did circuit breaker. So they did circuit breaker. Tesla coming back down. Tesla at 224s right now. 224s. Bob at 108s. Yeah, do we keep coming down, chat? Or do we bounce back up today? Put bounce or down? Or continue? Do we bounce back or do we continue down? Put bounce if you think we're going to bounce back, and chat put continue if you think we're going to continue down. Nasdaq's dropping down. I'm watching 17,000, which is right here on the NQ. 17K. Bounce down. Bounce, continue, flat, bounce, down, bounce, bounce, down, sideways, bounce, continue, continue, continue. Yeah. We'll see you guys. Yeah, Bitcoin down to the 70s again, man. Bounce, bounce, Beyonce. Continue, continue. Yeah. So let me see. Down, bounce, continue, bounce. So we're pretty split, honestly. We got a lot of people that think we're going to continue, and then we got a lot of people that think we're going to bounce back. Kind of split down the middle here. Ugh. I don't even see what y'all are arguing about, Ryan. It's better to just tune them out and ignore it. One of the things like different people try is they try to just bring you different ways. Stonewalling people is the best option. It really is. And like even with like narcissistic people, which I'm not saying anybody that you're having a conversation with, Ryan, is, but like even with narcissistic people, the best thing to do is just pretend like they don't exist, right? Like that's kind of what I in real life, that's what I use on people. I just kind of ghost them, don't say a word to them, and that's usually the move. And you can tell it bothers them if they keep coming back with more and more and more. But like, you know, stonewall them. That's what you got to do. Not with you, Ryan. I'm not even saying A1 is that. I don't even know A1. Hey, y'all, I think y'all just disagree on political stuff. You know what I mean? But with that said, both of y'all should just ignore it and move on. And like, it's all good. You know, just y'all disagree politically. It's okay. Yeah, so the Nasdaq bounced right at 17K, 200 exponential moving average. Look at that bounce right at 17,000. Palantir at 68. Bob at 108s too. And KD at 31,735. So I mean, a lot of stuff's consolidating after dipping down some here. You know, we don't really have any big data showing up this morning either, though. Like, look at these drops. So like we basically rebounded back up, and now we're kind of consolidating flat, kind of testing the lower end of this range though in a lot of stuff. Again, news-wise, you know, Jamie Dimon has been speaking some this morning, kind of putting out market stuff. The president has spoken a lot this morning, basically urging rate cuts. And again, I think that has honestly changed the rate cut outlook here as well, to be honest here. The rate cut outlook has changed some because of that. If we look at the CME watch tool, see it pivoted back and forth now. So this is going back and forth now. So at this point in time, again, it has gone back to about 47% likelihood of a cut. A 54% likelihood of a pause next month. So it's almost a 50-50 split. But yeah. Jim Cramer again warned of a 1987 Black Monday style market crash today. The market ended up rebounding back up. Yeah, so oil prices are down for sure. Dead cat bounce? Maybe. Panic sellers? Maybe. It's kind of shocking how accurate Cramer is, to be honest. But it's funny nonetheless. Yeah, we're at the very least we're volatile today. We're gonna be volatile into the opening bell, which would be fun. We got almost 830 here before 8:30, or before 8 a.m. really. So shout out to you guys. Thanks so much for joining me today, man. Yeah, one thing I learned about the music is you can't please everybody. If I put on super hype music, people complain about it. If I put on calm music, people complain about it. If it's too loud, they complain. If it's too low, they complain. And it's all good, but that's just kind of how the internet goes, I think. Is it time to buy in here? Did I forget the S and... Oh, I said market around the world. There we go. Thank you, sir. S&P futures rebound. Yeah, so we're down about a couple percent right now still, I think, on the S&P, right? If we look at the SPY, let's take a look at how much we're down on a percentage basis as we speak here at relative to Friday's close. Relative to Friday's close. If we take a look at this, again, on a percentage basis, the SPY is currently at 493s. It closed at 505s. So we dropped from 505 down to 493. As of now, we are down 2.4%. 2.4%. 2.4% down in the SPY. If we look at the Nasdaq here, Nasdaq closed at 17,483. It opened up at 17,042. Nasdaq is down 2.5% still as of today. 2.5% decrease. Now it's not as bad as it could have been. It's not as bad as it could have been, but it's still down. Tesla at 224s. Honestly, Tesla hit almost $200. Take a look at Tesla here. Look at this. Tesla hit almost $200. Got down to 208s right now. 208s. Kind of a crazy diff. Look at this. 208.50s. 208.50s. Yeah, what are bond yields doing? I'm sure bond yields TNX. Let's see what they're doing. I gotta look. They're not open yet. Ten-year Treasury yields as of this morning are at 3.987%. 3.987%. So they're under 4% again for 10-year Treasuries. Which is above where they were a couple days ago, honestly. So they're above where they were a couple days ago. TLT opening up lower, which means yields are higher today. Which is strange because typically, like, we're getting lower interest rate sentiment this morning with the likelihood of a rate cut next month going up today, not down. Yeah, we got earnings season coming up this week as well. On Friday, we have all the big bank earnings going live. So Friday morning, we got all the big bank earnings going live. And so we'll see what that looks like. But Friday, we do have all the big banks coming out with earnings. We got JP Morgan. So just to put this into perspective here, guys, for Friday. Friday, we have... JP Morgan, BlackRock, Wells Fargo, Bank of New York, Morgan Stanley earnings in the morning. We also have PPI inflation data Friday morning as well. And so we do have a lot of stuff going on this week that might influence markets here. We have a ton of stuff that might influence markets. We'll see what that looks like, but... That's why a Fed rate cut is required, maybe. Yeah, bonds interesting. It's hard to gauge. Really hard to gauge. Yeah, appreciate the support, guys. Thank you. Appreciate the support. Apple at 181.20s here. 181.20s. So Apple, honestly, down a lot from its highs, too. Apple got up to, like, what, 240s? 260s a couple weeks ago. Back in January, actually. Apple got up to 260. Interesting. Yeah, Nasdaq's testing 17,000, which is that level here. So, with everything going on, we can trade on Top Step, correct? I'm pretty sure we can. Okay, guys, Fed is going to have a closed board meeting at 11:30 Eastern Standard Time today, April 2nd. A closed door meeting at 11:30 a.m. Eastern Standard. Are they going to do an emergency cut? Is an emergency cut coming? Yeah, I just looked this up. This is accurate. Just to read it. It is anticipated that a closed meeting of the Board of Governors of the Federal Reserve at 11:30 a.m. Eastern Standard Time on Monday, April 7th, which is today, will be held under procedures set forth in Section 26(1)(b), 7 of the board's rules regarding public observation of meetings at the board's offices. So yeah, again, closed board meeting April 2nd. Yeah, interesting. Yeah, so Italy's foreign minister says the European Union may postpone counter tariffs on the U.S. from April 15th to April 30th. Again, Italy's foreign minister says the European Union may postpone counter tariffs on the U.S. from April 15th to April 30th. Interesting. See if that continues today, guys. We'll see if the volatility continues. I mean, so here's 17,000 on the NQ. 17K. I appreciate it, White. Thank you, bro. Is blood running in the streets? As of today, guys, let me know. Is blood running in the streets? All right, guys. So blood everywhere. Yeah, I guess so. Just to show you guys what we're talking about here. So there's a very famous quote. I think it's Warren Buffett, where he says, "The time to buy is when blood is running in the streets." It might have been Rockefeller, actually. Hold on. Let me see who it was. It's Rothschild. It's Baron Rothschild. Yeah. He said, "The time to buy is when there's blood in the streets." Quote is often used in context of contrarian investing. Hey, thanks, Beach Bum. Y'all go check out Beach Bum's channel. Good channel. Whew, it's time. We got over 1,000 people here before 8 a.m. I appreciate you guys choosing to join us here. Again, we give you guys all the breaking news in markets here. I don't even claim to be a good trader. Like, none of that stuff matters. Everything we do here is free. I appreciate the love. Thanks so much, chat. We appreciate the growth. Honestly, we've been growing like crazy here. I'm not saying a crash or a correction is good for my viewership, but it ain't bad. I'll put it that way. Yeah, definitely top 3-ish traders in the world right now. Let's see if we hold. Honestly, Nvidia at $89, so under $90 now. And I think that's one of the reasons the market's down. It's not just Nvidia, though. It's also Apple. Apple's been a big big reason the market has corrected recently. And it kind of makes sense, right? With the added 34% tariffs, Apple buys a lot of stuff overseas. It imports a lot of stuff from overseas. And with all these tariffs coming into effect, the margins on Apple products are going to be much worse. And Apple has obviously negatively reacted to these tariffs in a big way. They have dropped massively here. Look at Apple here. So 260 at highs back in December of last year, all the way down to 170s on a percentage basis for Apple here, right? Just looking at how much Apple is down total since December. Apple has dropped from 260 all the way down to 174. Apple is down 33% since December of 2024. 33%. One of the bigger reactions here relative to other stuff. Like the Nasdaq currently is down 27%. The S&P is down a little bit less than that, but Apple is down big. It's the most heavily weighted stock in markets too, so it's obviously dragged a lot of stuff down. Tesla obviously is down more than any of this. Tesla's down like 50% or more now. Tesla hit almost 500, or might have actually hit 5. So Tesla is obviously one of those stocks that, yeah, Tesla was at 488s. It's now at 220s, hit 207s. So from highs to lows, Tesla dropped 57.5%, 58% since, what is this? Since December of last year. So a lot of stuff's down. You know, Apple's going to be fine long term with all this said anyway. Like, Apple's going to be good regardless. It doesn't matter. I mean, it might take years to get back to where it was, and we don't know how long that'll be. But I still like Apple as a company, regardless of this stuff. You know, I'm not looking at where we're at now. I'm looking at Apple's business as a whole, and I think Apple's going to be fine, of course. I think that's very obvious, too. What are the odds we get this 25% correction versus a much larger? Well, I don't know what the odds are. I think it depends on what data shows up as. Again, I think if inflation data comes in good, it opens up the more green light for the Federal Reserve to cut rates in May, and we start to get lower rates. That stimulates the economy, kind of brings us back, and markets rebound some. I think that's plausible. I don't know for sure, but I think it's plausible. All right, so where's the circuit breaker halt code today? Where's the circuit breaker number today? Man, look at this pop back up here. So we're rebounding a lot right now. Look at this bounce in the NQ. Alright, so we just built up about $300 cushion on the day on one of our combine accounts. It's just a combine account though. We'll see how that goes. Whew. Man, we're up about 5 on the day now too on this account. If we get funded on this one, it'll be our 5th funded account. Just to put this up. You guys want to see it? These are the trades this morning. And again, we're green on every funded account that we have too, which feels good. Trying to watch everything. Tesla. Alright, so we're coming back down under that 200 exponential here. But we're kind of flat though, so it's very difficult to try to predict what we're going to do here. I would short a bounce, to be honest, but I think I'm just going to wait. We got a $500 cushion as long as we're not getting too close. All right, so S&P 7% is the first circuit breaker on the S&P. Well, they're talking about halt levels is what they're talking about. I would have shorted this little pop, but I'm definitely the top 3 worst trader ever of all time ever in the world. Looking at our poll numbers, does the market crash continue into the opening bell today? 75% of people say yes. Well, yeah, there's 7%, 15%, and then 20%. The 20% drop in the S&P halts us for the rest of the day. 15% drops halts us for, what, another... Let me see what it is. Yeah, 7% and 13% drop us for 15 minutes. And then if we drop 20% in any day, we get halted for the rest of the day. So... look at the market turn back down here, guys. So the market's starting to turn. Yeah, I mean, again, the emergency meeting, if the, I'm wondering what they're talking about. They've got to be talking about rates, right? They've got to be talking about rates. Let me see if I can research more into this. Closed board meeting today as of 11:30, or at 11:30 today. On the agenda, reviewing discount rates. Might be nothing, might be the first real pivot signal. All right, so yeah, the matter to be considered, review and determination of the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. Are emergency rates coming? That's what I'm wondering. Are they going to do an emergency cut? The president also pushed for lower rates, said there was no inflation, and he called for them to cut rates. All right, look at the market coming back down. That's why I would have shorted a little pop here. Okay, guys, so we're testing 17,000 again on the NQ. It's a pretty big milestone level. We're going to draw some levels a little bit closer to the day. All right, so I'm trying to look up. So when the FOMC holds an emergency meeting, any policy decisions made are typically announced shortly after the meeting concludes. And so you want to watch for this at 12 o'clock today. Unlike regularly scheduled meetings, which often have predetermined announcement times, emergency meetings may not follow a set schedule. And so timing may vary in terms of like when we get the updates on what they said during the meeting. In the case of an emergency meeting like today at 11:30, the Fed typically issues a press release or statement soon after the meeting concludes to inform the public of any decisions or policy changes. The exact timing of such announcements can vary, but they are generally made promptly to ensure transparency and to inform financial markets and the public. So, yeah, basically, tune in around 11:30. I don't know if I'm going to stream it, but maybe. Maybe. I don't know. Yeah, he's not gonna. This is a closed door meeting. We're not gonna know what they're saying until after it's done. There's nothing to stream. Yeah, so I would stream it if it was live and streamable, but it's a closed door meeting by the FOMC. So I would stream it for you guys, but yeah, closed door meeting. Yeah, so again, the only thing I can, say is maybe we're gonna get an emergency cut. We'll see what that looks like. And again, I'm now that this is announced, I'm wondering. I'm surprised, like, the likelihood of a rate cut has not increased here, right? Because we're still sitting at 47.53. Look at the Nasdaq just broke under 17,000. So the NQ just broke under 17K. I'm surprised we don't have a greater probability of a rate cut by May, because if I think the likelihood of a rate cut by May just went up, because say we don't do an emergency cut, we still have the chance that we're going to cut in May, and now we also have the added chance of an emergency cut. So what's up, Paulo? How much up or down do you think the Nasdaq ends? How much up or down do you think we close today at in the Nasdaq or the S&P? Yeah, let's just keep it respectful regardless of politics, guys. Let's just keep it respectful. 5% down, 4% down. Interesting, everybody has this like a similar tune here. Again, as of now, the Nasdaq is down 26.5%. 26.5%. Again, we can take a look at, here's the NQ on the left side. You can take a look at Nvidia. Nvidia is all the way down to the 80s. Apple down 33% from the highs, currently sitting at 181s here. Let me move this over. Apple at 180. The description, but remember, not an investment professional. I'm not liable if you lose money. Always got to make your own assessment. Trade responsibly, guys. I'm not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Chat. Don't copy me. Not an investment professional here. Is this officially a crash? Well, a lot of people are going to consider it. It depends on where you call it. I would call this a crash, to be honest. I would call this a crash. But it depends on where you call it, right? Like if we take a look at, Apple definitely crashed. The Nasdaq, 26% down. The question is, do you consider the crash from February? If it's February, it's probably considered a crash, right? We hit 22, but the Nasdaq was only at 22s in February. So since February, the Nasdaq is only down from 22 to 17, which is a 22.5% drop. So a lot of people are still going to consider that a crash, yes. And Tesla at 222.80s, looking very weak. Definitely a bloody market here, chat. The software rates came in at 4.35% for April 4th. Look at these drops, guys. So now that we're under 17,000, the Nasdaq's coming down heavy here. We're under the 200 exponential. Apple, Nvidia are both dragging things down here. Here's Apple. We're at 180.80s. It's my first crash. Yeah, again, guys, listen, I told people in December I thought the market would correct or crash this year. I got flat in December, and so we actually are completely flat right now, and we have been for the most part since December in terms of like our investments. And again, it feels good, man. It feels good, and so acting like I'm just a perma bull or anything like that. Honestly, I'm probably more flat than a lot of perma bears in this market. And so it feels good, man. It feels good. Like, I'm very happy I was able to get out. Like, honestly, it feels good when you're able to avoid completely a crash. If you look at where I got out in December too, let's look at December. So I got out. Here's the NQ, just to put this in perspective. I got out here. Feels good, man. Feels good because we avoided all of this on the downside. And we were holding some stuff too. Like, we were holding Apple. We were holding a lot of different things. And luckily I was able to get it. And again, I thought the market was manic at the time. Like, we were up way too much. It was just too high. And it had been pushing up too much. And I thought we needed to correct for health. And it looks like we did because market's down now. Now, I could have never predicted that, and nobody could have really, that these tariffs and everything going on would happen. But yeah. Feels good, man. Feels good. Yeah, honestly, I don't know when I'm going to start buying up either. Yeah, I mean, nobody's going to be able to correct this, or predict this. The tariffs sparked this. You know what I mean? And again, I said both crash and correction, just to clarify. I thought we needed to correct, but, again, I couldn't have predicted this. This is too big of a drop. Again, I'm just glad I'm flat. I thought we needed to come back down, and we did. And so I'm just glad I'm flat, to be honest, because it's a lot easier to watch this stuff happen, especially for somebody like me where, like, my YouTube channel benefits from stuff like this, to be completely honest. Like, typically, during these big market catalysts, like, we get a lot more attention, a lot more interest, and so we benefit from it. I think it would be a lot harder to kind of appreciate the gains and that stuff that we have if I was sitting on some big losing positions. I think I'd be a lot more emotional about it, but... Yeah, I don't know how long we're going to bear market either. It's hard to tell. We could bear market for years. We could bear market for months. We could bear market for, half a decade. You never know. Depends on what happens. Depends on what the economic situation is. Because we don't really have weak economic data right now. We just don't. Like, we don't have weak... Like, the tariffs are sparking this. But in terms of metrics like GDP, like we haven't seen them, and some of these are lagging, right? Like I think a really interesting report this month is going to be GDP, because the GDP that we got this past month was lagging. It was from the fourth quarter of 2024. A lot of people are speculating that the current quarter, first quarter of 2025, is going to be negative for GDP. And so the problem that I see looming here is that if we start to get weak economic data now, like if we start to get negative GDP that trends towards a recession, if we start to get like losing negative economic reports, that might spiral the market even more so down. I'm not saying that's going to happen, but that is one of the risks that I currently see in this market, is that GDP comes in. We got GDP at the end of this month, in about 2.5 weeks is when GDP comes out for the first quarter of 2025, looking at the last quarter. If that starts showing up negative, if payrolls show up negative, if unemployment spikes up even more, that is where, and not only do we have all that stuff, but we have the recent corrections, market crashes, down, weird red action. That is a situation where we could go even more so down, and that you really want to be careful of course. And so just watch the metrics. We'll cover it all live here on stream. I'm not really interested in buying up anything yet. But again, we drop another 5 to 10%, I might be, to be honest. Like we drop another 5 to 10%, I might be interested in buying stuff up. It just depends though. Like if I did start buying stuff up, it would be like a DCA long-term strategy that I understand could just kind of keep going the other way against me for a little bit. So just be careful, guys. Nobody knows what the heck the market's going to do. No, we're not in a recession. Based off of the technical definitions, we're not able to be in a recession yet. A recession is 2 consecutive losing GDP quarters. Please stop spamming, Ray. You keep spamming things over and over again, brother. But in order to be in a recession, we need 2 consecutive losing GDP quarters. We haven't shown 1 losing GDP quarter yet, let alone 2. But that's kind of my point here, is that if we start to get GDP for last quarter and it shows up negative in 2.5 weeks, and it looks like we might be trending towards that, that is a situation where you want to be careful. But we're not there yet. We have to have 2 losing GDP quarters back to back, and we haven't had 1 yet, so we still got time. And again, it's also possible that in 2.5 weeks GDP comes out and it's not negative. And so, yeah, we don't really know what we're going to get yet. I never said bear markets don't happen for years. That's not what I said. I said there's only been 3 times. What I actually said was that there's only been 3 times. Again, guys, like I predicted this correction or crash. And so I know it might feel good if you've been bearish for 4 years and I criticized you 3 or 4 years ago about market crashes to be like, aha, I told you so. But just to put it into perspective, we're still above where most of the people that I've seen in chat that predicted crashes, we're still above where they predicted them. What I said the other day was that there's only been 3 times in market history where we have bear trended for more than 2 years in a row. This is an actual, and this is just a fact about things. There's only been 3 times in history of finance where we have bear trended for longer than 2 years. One of them was 1929. The other one was the dot-com crash in 2000. And that one we actually had like the mortgage disaster jump on top of it. So that's different too. I can't remember when the third one was. I think the third one, I'll have to look at when the third one was. But the point is, they're rare, right? They're rare. But just because they're rare doesn't mean they're never going to happen. Like the market eventually, if you look forward into the future, eventually we are going to get bear markets. And eventually we are going to crash. It's something else I said was it's an inevitability. Like it's going to happen. Like crashes, corrections, they're going to happen. And again, another thing I said was like, it depends on when you consider the last crash. If you consider the last crash 2008, we're due for one. And again, we're now getting one. So it just depends. Yeah, I mean, Guy and Van, it really seems like you're just trying to disagree. Are we in a Santa Rally 2024 market right now, brother? Are we in 2024? Are we in the election year? You know, come on now. You're just trying to disagree now. Yeah, I mean, this crash is caused by tariffs, 100%. But again, the market was due. It was due. Again, this is why I got flat in December. This is something I said over and over again. Market's due for a crash. Or not a crash. I think I said the market's due for a correction. But, you know, same thing, basically. And could I have predicted it drop this quickly, this fast? Of course not. The tariff news is definitely what caused this. But the Nasdaq was up 105%. It was time for a pullback. We needed a pullback. It's healthy for the market to pull back to a certain extent. I'm still not going to short the market on the downside. That's just not what I want to do. But yeah, he's on the short list. You got some people that are just strange, you know, like that are just really obsessive and strange. Like that guy like talks about how handsome I am and like all this kind of really strange stuff. And you can tell like when he says a bunch of stuff and I don't respond, he gets even more like kind of like desperate for me to respond. Just really weird putting yourself on the internet. I'll just say that. Very strange. It's a blessing. No, it really is. I appreciate you. Most of these guys here are really good people. Most of the chats here are very good people. I think we got a good community. I got a friend of mine in jiu-jitsu that watches the stream sometimes. And what he said watching the stream is that it's a really good community. It really is. Like most people are genuinely supportive here. Just good people, you know. They might troll me sometimes, but just good people. Definitely top 3 most handsome. Honestly, it's just strange. You get people that just don't have much going on, that just kind of really obsess, get a little off in the head, I think, and that's kind of how it goes. Yeah, it's good content for sure. Very healthy, yeah, for sure. Do I have nothing in the description? Oh yeah, we got stuff in the description. Yeah, stock and futures market crashing down pre-market. Will this crash continue into the opening bell? We did a poll. That's actually what our poll was. We are 75-25 split. Can't find any info about the emergency meeting. There's a lot of different posts about it. The Federal Reserve posted this. I'll show you guys a picture of it. But this is not just me. This is a lot of people. Yeah, look. So here is the post. There's a lot of people covering this, not just me. Like, look. Here's the update on it. It is anticipated that a closed meeting of the Board of Governors of the Fed at 11:30 on Monday, which is today, will be held under the procedure set forth in Section 26(1)(b)(7) of the board rules regarding public observations and meetings at the board's office at 20th Street and C, and by audio-video conference call. They are going to be talking about review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. Basically, interest rates are what they're talking about. Yeah, and I think here's the problem, right? Like, look. One of the things that I think people see me here is people see me be very against over-predicting of crashes, right? Like, if anything, it should give me more credibility. I mean, I'm the top 3 greatest investor, crash predictor, and trader in the world right now. For sure, definitely top 3. But it should honestly give me more credibility. I've criticized people that over-predict crashes for years. You know why? It's because a lot of them are wildly wrong about everything. People have been, some of the same people trying to say I told you so are people that have been predicting market crashes for 4+ years, 3 to 4+ years. And again, in that situation, you got YouTubers that have every 2 weeks have been posting videos telling people the market is going to crash for 4 years straight. And most of the time they're wrong, and then they create another video kind of diluting their video so nobody sees the crash predictions. And again, it's got a lot of retail traders just regurgitating that thesis back here for the last 4 years straight. And again, I've been wildly critical of this because crashes are not that common. They just don't happen that much. But I hope you guys understand, like, when I see conditions in which I think we might correct or crash, I told you guys in December, I don't like the market right now. Market's up too much. We might correct. We might crash. I got flat on my positions, and I'm 1 for 1 because we were absolutely right about it. And so, you know, you got to understand, like, crashes are wildly overpredicted. Everybody wants to be Michael Burry, and a lot of people that predict these crashes have predicted these crashes from lower points in markets than we are right now, which means what? It means they're still wrong because they're predicting crashes from, you know, 15,000 on the Nasdaq, and we're at 17,000. And so you got to understand, like, crashes are wildly overpredicted. You know, it doesn't mean they never happen. A crash is inevitably going to happen. If you throw darts at a dartboard, eventually you're going to hit it, but it doesn't mean you're accurate in predicting them. And I think that's an important thing for people to understand. I think no matter where we're at in markets, somebody thinks we're going to crash. It doesn't mean we're about to. And so just understand that. Understand crashes are super overpredicted. But we finally hit one. So everybody and their grandmother's going to act like they're right. But are they really, though? You know? This is my first real crash as an investor. What's your advice? I don't even know what advice is, bro. I don't give out financial advice, dude. I don't even know what advice is. Definitely not an investment professional. Not liable if you lose money. Not financial advice. Understand CFTC 4.41. Do not copy me. I have no idea what I'm talking about. Don't copy me. Not an investment professional. With that said and out the way, though, what I would do is what I'll say. I'm not going to say what you should do. What I would do. Wait for a moment in which you think we're down too much. The real way you make money here, to be completely honest, is dollar cost averaging over long periods of time. And so if we drop another 5 to 10%, that's probably where I'm going to start buying back in. But if we start to get a couple big weeks of rebounding, I'll probably buy back in then too. It just depends. But again, I can't say that's going to work. It might go wildly against me. Maybe we just keep going down. But I think if you DCA in an example, like dollar cost averaging basically means that you take periodic buys at specific time intervals regardless of price. Like an example would be every week I'm going to buy 50 shares of the S&P or the whatever, or the Nasdaq or the SPY or Q or whatever it is. And regardless of whether we're up, down, sideways, you buy that 50 share position. If you do that for months or longer, over a long period of time, you are almost certain to make money. I can't guarantee it. Nobody can. Market's not, you know, there's no definitive in markets. There's always variance. But if you do that for a long period of time, you are almost certain to make money. As long as you do it with healthy indices, blue chip companies, you know, as long as you do that, you're probably pretty set. But you got to hold it a long period of time. If you hold it over a 2-year period, you're going to lose most likely. Or if you do it, not a 2-year period. If you do it over a couple week period, you're going to lose most likely, or you can lose. I don't even know if it's probable you'll lose, but you could. But if you do it over a long period of time, meaning years, and you're buying the right things, that's the biggest statistical edge the market ever gives you, you know. I say this once, I'll say it again. It's fine to be a perma bull because long-term markets are going to go up. It's an inevitability. Looking at over 100 years of data, markets are going up long-term almost certainly. You know, there's a small percentage chance likelihood that they don't, but it's pretty freaking probable. Short-term market can be risky, and the longer you hold a short position in the Nasdaq and the S&P and the Dow, the less likely you are to make money. The longer you hold it. The longer you hold a long position in the S&P, the Nasdaq, the Dow, the more likely you are to make money. And again, this goes back to a century of market data. And this is just absolutely true. At the same time, though, currently I've been flat since December. And there's a reason for it. Is because I think the risk right now is pretty high. You know, too much unknown happening. Markets were up too much. The AI boom just happened. And the last time we had a big brutal market correction was from another tech revolution in what's called the dot-com crash. In the late 90s, we had all these internet stocks take off. And then at the end of the 90s, you know, the check came for all those big increases in price. And we had one of the longest bear markets in history following it. Part of the reason was because you know, we had the dot-com crash, and then we spiraled into the mortgage disaster of 2008. So we kind of had two recessions and market, you know, fear markets back to back, very short term, close to each other. And so that's probably one of the reasons, but yeah. When does one cash out if you DCA? I mean, it's all up to the person. Everybody's different. In theory, you're supposed to buy and sit forever. Builds generational wealth. If you buy stocks and never sell, you know, by the time you're 30, 40, 50, 60, those stocks will have, you know, gone up thousands of percent, most likely. Depends on if you're buying the right stocks or the right index or whatever, but you can buy gold, you can buy real estate. The point is to hedge against inflation. How many people have started entering again here, though, chat? I'm not doing it yet, but I'm pretty close to doing it. We got another... Again, we drop another 5-10%, I'll probably start. Yeah, look at we're popping back up over 17s. Now we're testing 17.2s. I gotta just wait. We still got an hour before the opening bell. We got over 1,300 here. Appreciate the love, guys. I like it. Don't be terrified in this market. You'll love to see it. All right, so we got Hassett speaking. Hassett said there are some great deals countries are bringing on tariffs. The president will decide if the trade deals are great enough. More than 50 countries negotiating on tariffs. Yeah, we got an emergency Fed meeting at 11:30 today. Yeah, join our free Discord. Completely free, doesn't cost a penny. There it is right there. Check it out. See, but anytime we post this one, for some reason, Pawn, it doesn't work. Yeah, join that Discord that Pawn just posted right there. Check it out. And again, if you want to help support the channel, check out TopStep. TopStep gives you a 50K demo. They test your skill with a 50K demo. If you can pass the test, they fund you. If you fail, you only lose what you pay for. The base one's $49. So they give you a 50K demo. It's $49 a month, monthly subscription. If you can make 3K in profit on that demo in futures without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split. And they've paid out millions, almost 200 million since 2020. They fund thousands of traders. It's just a great way to learn how to trade. Most day traders lose. And so if you put up 5 or 10 or 20K of your own money, let's just be honest, you're probably going to lose most of that, if not all of it. Versus trying TopStep. If you fail, you're out $50. And if you fail, they give you a real-time demo account anyway for you to practice on. And if you pass it, you get a 50K funded account, 90% split. And prior to the 90% split kicking in, you get to keep your first 10K in profit. And so it's very similar to funding your own account in terms of reward for that funded account. The risk is $50. And most day traders lose. The futures market has no PDT rule. You can day trade the S&P, the Dow, the Russell, gold, some currencies. Very similar to day trading stocks. No PDT rule. Just a great way to learn. And most pro traders trade futures anyway. So if you want to check it out, great way to help support the channel. They got tons of great resources. They've been around for over 12 years. And it's just a good way to learn. It kind of conditions yourself through repetition. Most traders lose their first few years before they win. And they lose the entire time. And so instead of throwing your own money away, try this and you know, get that market tuition in this way versus, you know, all the other stuff. If you want to check it out, they are an affiliate of mine. I am biased. I get paid by them. Some would say I'm the top 3 most biased trader of all time in the world right now. Definitely top 3-ish. But if you want to check them out, there's the link. I'll put the link up in the chat. You can also find the description. There is something in the description box. with night mode. Yeah, let me try. I gotta figure out how to do that. Server settings. Rolls. Oh yeah. There you go, pawn. Let me know if that worked. That should work. There you go. If Fed cuts rates, do we rebound? I don't know, man. I think we could. I think we might. We could. I don't know for sure. Stop spamming, guys. Yeah, look, I got curly hair, guys. I can't help it. I really can't help it. This is how I look in the morning, bro. Hey, listen, y'all be okay. I need a haircut, but I got curly hair. It'll be all right. Top 3 greatest hairs in the world right now. That's all I'm saying. It's 11:30 Eastern Standard Time. It's an emergency Fed meeting. They got to be talking about potentially cutting rates earlier. Yeah, so White House senior advisor Hassett says it's time to ease off rhetoric a bit. So they suggested easing off aggressive tariff talk after April 2nd announcements of 10% tariff on imports. Have you ever shaved all your hair off? I mean, it depends on what you think of all. I've definitely gotten short haircuts before. I used to like my hair long. But it's too much now. It's too hard to deal with being long. I used to avoid haircuts completely, but can you go over the inverted yield curve? Yeah, I mean, inverted yield curve is usually a recession precursor, meaning that short-term bond yields are higher than long-term bond yields. In logical, like looking at it logically, short-term yields should pay less than long-term yields because you got to hold them for shorter periods of time, and so they're less risky. And so shorter-term yields should pay less than long-term yields just by basic logic. One of the precursors to a recession is when that yield curve inverts, meaning shorter term yields are paying a higher interest rate than longer term yields. It's called a yield curve inversion. And it's something that we've seen over the past few years too. Does this link work, guys? Somebody said the link doesn't work. Here's the Top Step link. Does that work? Somebody's telling me it doesn't work. You can click on it. Let me know if it works. It should work. Let me see. Yeah, the yield curve is honestly inverted and uninverted a couple different times, you know. Yeah, so the 10-year currently is at 4%. The 2 or 3 year is currently at 3.5%. So the yield curve is not inverted right now. 2-year yields at 3.6%. The 10-year yields at 4%. 30-year yields at 4.46%. 1 year. Actually, the 1 year is paying more than the 2 year right now. Actually, hold on. All right, so look at the Nasdaq coming back down a little bit. It's still under 17.1s. Most people look at the 10-year and the 3-month. Where's the 3-month Treasury yield? All right, so 4.2% for the 3-month. I don't know. Actually, the yield curve is inverted. So the 3-month Treasury bill is at 4.2%. The 10-year is at 4%. So yeah, the yield curve is inverted. I'm sorry, guys. My bad. I retract my previous statement. The yield curve is inverted. The 3-month is paying out higher than the 10-month, which is inverted. Yeah, it's strange. There's a lot of sources. Multiple people have confirmed the 11:30 emergency meeting. So yeah, a lot of people have confirmed it. Do you guys think the market will react positively or negatively to this emergency meeting? Good or bad reaction? No, they look at the 3-month and the 10-year. Most of the time, but they can look at different ones. A lot of people look at the 10-year versus the 2-year. Depends on which one you look at. The 2-year and the 10-year are not currently inverted. The 2-year is currently like 3.7%. The 10-year is 4% basically. So it depends on which one you look at. Usually it's the 10 and the 3-month. Has historically been one of the most reliable predictors of a recession. Isn't the correlation between the 2 years? So it's actually the 3-month and the 10-year is usually the recession predictor is usually the 10-year and the 3-month. You know, people watch the 10 and 2-year. It's widely followed, but considered less predictive than 10-year, 3-month. There's a meeting, I'm pretty sure, right? Let me make sure. Hold on. Okay, so yeah, actually, maybe they're not confirmed yet. Okay, so maybe it's not an emergency meeting. So closed board meeting on April 7th. I'm trying to look deeper into this, guys, about the emergency meeting. I guess it's not confirmed. All right, so the Federal Reserve is scheduled to close meeting for April 2nd at 11:30. Review and determine the advance and discount rates charged by the Fed. When was this meeting scheduled? All right, Nasdaq testing that 17,000 level again. All right, they announced this closed meeting for today on April 3rd. So it wasn't scheduled today. It was scheduled on April 3rd. Which is right after April 2nd when we got some brutal red action. So it still doesn't necessarily, this was Thursday last week. Still not good, you know, but it wasn't scheduled today. Yeah, so it's a routine Board of Governors session on discount rates. Yeah, you guys are right. Not an emergency meeting. Y'all are right. I'm wrong. Y'all are smart. I'm dumb. Y'all are very good looking. I'm not attractive, guys. I know. I get it. But yeah, I guess I was wrong there. No, there's a meeting, but it's an emergency. It's not an emergency cut meeting. It is a meeting on. They scheduled this meeting April 3rd, right? So April 3rd, they set this meeting, which is right after April 2nd when we got those crazy drops, right? So I don't know if it's necessarily good, but I don't think it's as bad as an emergency cut meeting, or good. Maybe people like emergency cut meeting. JP Morgan, their worst case projection for the S&P is $4,000. So Navarro says any discussion of a recession seems silly, according to CNBC. I don't know, man. I think it depends on what GDP shows up as this quarter. Yeah, it could be related. I don't know. Which tie? You know, he actually talked about his tie in the FOMC thing we did on Friday. We did an FOMC speech by Jerome Powell on Friday. We had like over 5,000 people watching it. One of the reporters asked him about his tie. She said, like, hey, why do you always wear a purple tie? And he said originally he just kind of wore it because he liked it. But then people started making predictions and he didn't want to be weighted to either side, red or green. So he wore purple, is what he said, basically. Look at the market spike up here. Let's see if there's a reason for this. The president's trade advisor says the Dow will 50,000. He also said that Taiwan reached out overnight on tariffs. MicroStrategy says unrealized loss on digital assets for quarter one came in at 5.91 billion and generated net losses in recent periods. Expects a net loss for quarter one, according to Bloomberg. I mean, it will 50,000 eventually, right? But the question is when. All right, so the EU President Commissioner says, quote, we are ready to negotiate with U.S. on tariffs, are ready for a good deal, but ready to take countermeasures. I guess the big question, guys, I'm going to end this poll. We got almost 2,000 votes today, but I'm going to end this poll and I'm going to ask people, does the U.S. enter a recession in 2025? I guess that's the only question we got today, right? All right, so we're pretty split on this one out of about 100 votes that we just got, 53 to 47%. We'll see if that pivots back and forth. Honestly, a lot of the market is just rebounded back up. Nvidia back up to $90 a share. Tesla, bro, it is cold in here, dude. wife literally has it like freaking Antarctica here. Oof. Ooh, it's cold in my house right now, guys. It's cold. Ooh. All right, I'm here. Don't worry. We didn't leave you guys. Whew. No, but you're going to get banned pretty quickly if you keep trying to troll and say, like, you know, dumb stuff. Microsoft at 355s. Oh, the heater's here. Oh, the heater's here. Yeah, look, I'm just going to go ahead and ban you. Honestly, this guy's too weird anyway, man. Like, I let him stick around probably way too long. Yeah, so, again, last year, guys, one of the things I said, since, you know, he keeps trying to disagree with me, but I'll go ahead and talk about it because it's an important distinction, I think. Last year was an election year. And so last year in 2024, throughout the year, everybody acted like we were going to crash last year in 2024. A lot of people acted like we were in a recession last year in 2024. And again, the people who thought we were in a recession last year don't really understand economics. It's something that I kept saying regularly because we need 2 consecutive losing GDP quarters for us to be in a recession, which we came nowhere near that last year. And honestly, last year alone, the Nasdaq and the S&P had one of their strongest years ever. And so something that I regularly said last year was that it's an election year. Do you know how rare it is for the market to be negative during an election year? For there to actually be a recession during an election year, it's incredibly rare. Incredibly rare. Most of the time the market pumps up throughout the entire year. But there's a big distinction from that versus, you know, second quarter of 2025, which is what we're in now. You know, now it's a completely different year. It's a completely different landscape. It's a completely different everything. And honestly, we're still not in a recession today. We're still not in a recession. Again, we'll see how close we are to a recession at the end of this month when GDP drops for the first quarter of this year, right? But it's important to make that distinction, which is that we're a year later now. The landscape of markets is completely different. And again, we might be heading towards a recession. A lot of analysts think that the previous quarter 1 of 2025 might be losing, right? And if it is a negative quarter for last year, in order to hit a recession, if we come out with another negative quarter for our current quarter, which is quarter 2 of 2025, then we're going to technically be in a recession, right? But we're not there yet. We still got to wait at least another quarter to see what the data shows up as. You can look at stuff like Atlanta Fed, New York Fed, GDP Now, where they try to gauge what the current quarter's inflation is, or you could look at the lagging GDP that we cover here, looking at the previous quarter. But so it's not fake. So this is not a fake banner. The Fed is going to have a closed board meeting at 11:30 today on April 7th. So that meeting is still absolutely happening. You know, there's a question afterwards, which is an emergency cut coming, but the closed door Fed meeting still absolutely happening today. And really, they scheduled it after April 2nd. So they scheduled it April 3rd, which was last Thursday, right when the market started to dump. And then we also have big brutal action, you know, yesterday and in some ways today, although we are bouncing back some today. And so it's still possible they talk about doing an emergency cut at this meeting. But it's not an emergency meeting. This was scheduled Thursday, but there's still Fed is still going to have a closed door meeting at 11:30 on April 7th. Yeah, I don't know where the bottom is going to be. I really don't. If you knew for sure when the bottom was in, which tech stocks would you buy? Oh yeah, we got to have good coffee for this stream. Well, the recession can't have started yet, Sai, because a recession is 2 losing GDP quarters back to back, and we haven't had 1 confirmed losing GDP quarter yet. And so, you know, now we might be heading into one, but we're just not in one yet. We need 2 consecutive losing GDP quarters for that, and that's something we don't have yet, unfortunately, or fortunately, I guess. Bond yields are decreasing, or bond yields are increasing. Bond prices are decreasing this morning. Weren't we technically in one, but the Fed said no. This was years and years ago, whenever we were in the middle of like the 2020 what followed 2020. We got some economic weakness. We got high inflation. There were a couple quarters where we actually had 2 negative GDP quarters. Sure, this was 2-3 years ago, but they didn't last long. And so whether you want to call that period of time a little mini recession is, you know, up to you. It's possible you could call it that. You know, technically we did, but you know, we've had pretty strong GDP for the last few years straight, including 2024 when we had very strong GDP, 2.53%. You know, again, just to put this into perspective, last year the S&P, the Nasdaq, the Dow had one of their strongest years ever. And so to say we had a recession last year is silly. To say we had, you know, a weak bear market crash last year is silly as well. This year's a different year, obviously, but that's how it goes. Yeah, I try to just little baby sips in my coffee. This will end up being a big, beautiful market, a market you've never seen. I hope so. Yeah, I don't know what kind of coffee this is, man. It's organic, you know. I'm a big fan of like community coffee, pecans, or like Louisiana King Cake coffee, you know. The market opens up in 30 minutes exactly. 30 minutes. All right, market's starting to pull back a little bit. Look at the 200 exponential right here. We are bouncing directly off of this level here. Right off of it. Yeah, there's some good coffee, you know. No, I drink my coffee plain. The bitterness wakes you up a little bit, and I need that for running this live stream. Cafe Du Monde. My wife likes cafe au lait coffee. My problem, honestly, is that if I drink milk-based coffee, I go to sleep. It doesn't matter how much caffeine it's got. If I drink like a any type of milk-based, warm milk especially, like if I drink a warm milk-based coffee, a latte or something like that, dude, I'm falling asleep. You know, I don't know why, but I can't drink milk in my coffee. I sleep with it. I'm not sure, Joshua. You got to look out for them. It'll tell you if you need it'll tell you if you eliminated from it. A 15-second chart. Oh, it is on a 15-second chart, guys. Whoa, dude, I didn't even mean to put it on that. I'm sorry. I don't know what that was. That was a 15-second chart, guys. I didn't even mean to put it on that. I'm sorry. I could definitely not trade with a 15-second chart. I know Dolby on Top Step TV will sometimes do it. Hey, buddy. I love you, dude. Have a good day, buddy. Love you, buddy. Just a sweet kid. Just a good kid, man. You know. Yeah, I'm looking at the Dow. Dow's at 37s. I mean, 50's not inconceivable, but what's on the schedule? So right now the rate cut odds have gone back and forth. Yeah. And so the rate cut odds have gone back and forth. At this point today, they are down to there's a 40% chance of a cut in May, which is next month. So at this point in time, there's a 41.5% chance. I love you. Have a good day. There's a 41.5% chance of a cut in May, a roughly 60% chance of a pause. So it's still pretty likely that we're going to pause rates next month, but you never know. They could change. Again, we got CPI inflation data later this week, right? CPI inflation data is going to influence these odds and expectations towards this. What I mean by that, okay, so the president just did another post. He said, quote, "Be strong, courageous, and patient, and greatness will be the result," end quote. I'm not saying I agree with this guy or not. I'm very neutral politically, not an investment professional. Don't copy me. But CPI inflation, it's what you want to pay attention to. CPI inflation data is what you want to watch. If we get high inflation, less likely that we're going to cut rates. If we get low inflation, like if we get lower or as expected, I think CPI is expected at 2.5%, which is lower than last time. It's what's expected. In my opinion, if we just show up as expected for CPI inflation, then it's going to be more likely that we cut rates, just because inflation is going to be a lot more manageable and under control. Yeah, we'll see if they do an emergency cut or not. I don't know. They've scheduled this meeting as of April 3rd, which is the day after April 2nd, when all the chaotic markets started here. So so it's a closed door meeting. It's a closed door meeting. So we're not going to know what it does, what they say during the meeting or anything like that. It's not that I don't read chat. It's that you're asking me very basic stuff that you're going to have to kind of figure out yourself. No offense. I would Google and research trading. This is the Nasdaq futures contract. This is Tesla. This is Nvidia stocks. But yeah, you're asking me such basic questions that you got to just... Google's your friend, sir. Google's your friend. If they do cut, how much does the market respond? I think the market wants rate cuts. They've wanted rate cuts for a while. Rate cuts mean economic stimulus. And so, we'll see if that happens or not. Tie colors, maybe. Yeah, the markets are fun right now, man. Honestly, it's really good for my channel. Honestly, we've been growing a lot in these moments, so it's not bad. So, Japanese Prime Minister held a video meeting with U.S. President. So that's going on right now too. Cash is king. Yeah. Yeah, our name is beginner trading, but you know, there's certain questions where, like, we can help new traders, but if you're asking me Googleable stuff, you know, I'm just gonna, you know, respectfully ask you to just Google it yourself, because wasting the time here on the stream doesn't make sense, I think. I guess the point is we help new traders, but if you don't even know what trading is, that's a different thing, you know. You gotta just, Google's your friend, bro. I'm not gonna buy back yet. Well, we'll cry about it, bro. You'll be okay. Cry about it, dude. You know, you'll be all right. Yeah, it's all right. I don't know why everybody's hoping for a rate cut, because it stimulates the economy. The good thing about growth is that we grow. One of my best quotes ever. But I think we also deal with more trolls and nonsense, but it's alright. It's a blessing. I'm a blue belt. Top 3 worst blue belt in jiu-jitsu of all time, though. Definitely top 3 worst ever. I was asking, how is it? What levels are you into? Just about the one chart on the right side of your head. On which chart, though? I thought you were asking me what the left chart was. Yeah, but 3 minutes is a long time. I mean, listen, ask away. Again, if it's really basic stuff, just Google it, man. You know, you don't need me to help you out if it's super basic stuff. Like, AI can answer a lot of this stuff too, man. You know. What's a stonk? Did you take classes in college that helped you with investing? Math classes, I guess. Economics classes too, you know. But economics is pretty easy to understand. You know, Federal Reserve is kind of the more confusing parts of it, I think, but once you understand that, it becomes easier to digest everything else. Like, the Fed just wants to keep things balanced, and so, you know, they have an option of, depending on what's going on in the economy, they can lower interest rates, stimulate the economy by injecting liquidity through money printing and quantitative easing, or if inflation's a risk, right? Depends on what's the risk, inflation or recession. If a recession or depression or economic weakness is a risk, they can lower rates, because by bringing interest rates down, people have cheaper access to money and through low interest. And so they tend to spend more, businesses expand at a greater rate, and it stimulates the economy. They can also do quantitative easing, which is a form of money printing where they create bank reserves online and they use those to buy up bonds, injecting liquidity into it and other financial assets, really. It injects liquidity, kind of stimulates the economy. The consequence can be inflation, though. And so if inflation's the risk to the Federal Reserve, then they will be what's called restrictive or hawkish. Then they will try to restrict the economy, basically like push it down a little bit to try to bring inflation down. And they restrict it through raising interest rates, because when people have less cheap access to money, they tend to spend less, and it pushes the economy down in that regard, you know. But it depends on what's going on in the economy. Right now, we're kind of in this middle road where a lot of people think the current quarter is negative, but we're not quite there yet. And so we're kind of on the cusp of the Fed cutting rates again. We don't know if they're going to cut rates this next meeting in May. It's about currently like 40 to 45% chance likelihood that they're going to cut rates in May, or if they're going to push that further. And again, with going back to what I just said, a lot of it depends on inflation, and we have inflation data this week. We got CPI inflation data coming out this week. If CPI inflation comes in hot, higher than expected, that means the Fed is going to be less likely to cut rates. If you're earning $3 per second, how much would you have in a day? Well, you'd have to do 3 times 60 times 60 times 24, right? Something like that. Hey, how you doing? Hey, hold on. Oh, man. Whew. All right, guys, market's very flat right now. We're not really doing much. We're just kind of waiting here. Live stream is a blessing. Much love. Yeah, you're welcome. If it's blurry, it's on your end, not me, bro. If they will not cut rates for the near future, they're going to wait for a recession first. Yeah, and again, a restrictive Fed, a Fed that's trying to, like an example of this is like 2020, we had all the craziness of 2020, and so the Fed tried to avoid a recession back then. And so they stepped in and brought interest rates to almost zero, trying to stimulate it to save us from 2020. They sent out stimulus checks, which is another form of economic stimulus. They did quantitative easing, and all of these things mixed with like supply chain problems and all the stuff going on made inflation spike following 2020. It was too much economic stimulus compacted. And so by the time 2022 rolls around, inflation's 7, 8, 9%, depending on where you look at it. And that's when the Fed pivoted to restrictive, and that's when they started doing a bunch of rate hikes. They started raising the federal funds rate, trying to restrict that inflation back down. And they did what's called quantitative tightening, which is basically the opposite of QE, which is money printing. QT is when they let their current holdings run off and mature and fall off their balance sheet. And this is a restrictive monetary policy that is, again, and they've been doing QT. They reduced QT the last Fed meeting 80%. The cap, they still kept MBS QT full swing though, which means mortgages might take a little bit longer to come down. But yeah. Yeah, we stream into the opening bell. Yeah, so that previous link worked, right? It should have worked. Let me make sure. Yeah, okay, good. Yeah, the link I'm using worked. Good. Yeah, I'm not really interested in adding to this yet or buying up right now. I just gotta wait. Yeah, and one of the things I'll tell people again is that do what you want to do. Like, some of my best trades have been trades that people made fun of originally for it. In 2020, I bought the dip, and I bought like United Airlines, MGM. I bought MGM at like $6. I bought United Airlines. It was like $25 a share. You know, it's at 60 right now. And most of these rebounded very, very quickly. And these are trades that people made fun of aggressively. When I bought Disney the last time when it was at like $75, $80 for a swing trade, a lot of people made fun of me. Disney ended up bouncing back to 120, which is around where I cut it. And honestly, it's back down to 80s now. So I don't know whether I want to buy Disney again here or not. But the point is, some of my better trades, I bought Target when Target was at like 105. And then Target ended up rebounding back up to like almost 150. And so some of my best trades people make fun of, but they're usually pretty good trades. And so you gotta trust your own intuition. And I can't say whether you're right or wrong. Nobody can, not an investment professional. But you gotta learn to just tune everybody else out and just kind of, you know, trade the edge that you think you have. I'm going to be day trading at the opening bell. I mean, yields increasing. Yeah, yields are going up, which is very strange, right? And again, the correlation that you want to understand here, chat, is that bond yields and interest rates typically follow each other. So what's very odd today is that if you look at 10-year yields, they are gapping up to almost 4.1% this morning, which means that we have a higher interest rate sentiment despite the current landscape of everything going on, right? And so again, here's 3 correlations to watch. I give people these 3 correlations regularly so they can understand how to watch economics and markets. The first one is that bond yields and bond prices inverse each other. If bond prices are going up, an example of this is you can see bond yields are going up. That means bond prices, like if I look at TLT, are probably going down, right? So you can see bond yields and bond prices inverse each other. If yields are going up, bond prices are typically going down and vice versa. That's the first correlation. Second correlation is that yields and interest rates parallel each other. And so if yields are going up, interest rate sentiment is higher. And that's one of the ways you can track interest rate sentiment short term is by looking at bond yields. Like TNX is going up today, which means we have higher interest rate sentiment and vice versa. And this is how you're able to kind of watch what's going on in interest rate sentiment and bonds and use that to gauge what's going on in the economy and markets. So, but yeah, interest rates, with all that said, bond yields increasing this morning, bond prices decreasing, which is strange considering the weakness that we've seen here. Now, maybe this is rebounding back up from the market coming back up. Who knows? But very, very interesting. Maybe, Austin. That's possible. People selling bonds to buy stock dip. Yeah, but if they were selling bonds, the yields would be going up, not down. You know, that's the only thing there. You know, bond prices are going up or going down right now. Or yeah, you're actually right. I'm sorry. You're actually correct. Yields are going up. Bond prices are going down. You're right. That's plausible. Maybe people are selling to buy this dip. That's possible. That's possible for sure. Sorry, I don't know why I didn't register that originally. All right, guys, we got 8 minutes into the opening bell. 8 minutes. Y'all be careful today, man. All right, guys, 7 minutes, or really about 6 minutes left. Nasdaq just fell under the 200 exponential. It's testing 17,000 again. Let's draw some levels on my charts here. 17K is definitely one of them, right around there. There we go, 17,000. I think we got this low here. Looks interesting. We got this double top up there, right around 2s. We got this isolated level up here. That makes sense. 750s, maybe 8s. All right, guys. 5 minutes. In the end, guys, I'm gonna, before the opening bell today, I'm gonna say this: nobody knows if we're gonna go up, down, or sideways today. Genuinely, nobody does. All right, look at the Nasdaq falling down here, chat. .3% at the open. Yeah, I'm watching Nvidia very closely here. Yeah, so we got our daily x.com post. Yeah, so Apple down big. We got Nvidia down big. Alibaba down big. Again, if you want a one-stop shop, follow us on x.com. We got a one-stop shop on x.com where we post all the big news going on in markets, to be honest. We also have earnings this week for banks like JP Morgan, Wells Fargo. All have earnings this week, which is even interesting, more interesting. Yeah, so again, if you want to All right, so again, here is our post, our morning news brief. Every morning we do one news brief on x.com. If you want to give me a follow there, here's the link. Check it out. Great way to help support the channel. All right, so Nasdaq still breaking down here, chat. Still breaking down. We got 3 minutes. 3 minutes. There's our x.com page. We post everything going on in markets, breaking news, as well as a daily news brief. So very similar to this YouTube channel, we end up posting all the news that comes out in markets that I think is relevant. President posted again. He said, quote, countries from all over the world are talking to us. Tough but fair parameters are being set, end quote. All right, look at the Nasdaq crack down here, chat. So we're under 17,000. We're at 16.9s now. 16.9s. I'm gonna pull up Nvidia as well as maybe like Apple here, because I think Apple and Nvidia are moving markets. Look at Apple turn. Apple down to 176 right now, chat. 176. We got a couple seconds before the open. About 50 seconds left, chat. Y'all be careful. All right, guys, we're day trading into the opening bell. Whew. All right, let's do this. $16.9s. There's the bell, chat. There's the opening bell. All right, let's see what the Nasdaq does this morning. Buy or sell right now, chat. Buy or sell. I'm not telling you what to do. Not an investment professional. Don't copy me. I'm not liable if you lose. I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say. Entertainment only here, guys. Got to get that in before the opening bell for sure, because who knows what's going to happen at the opening bell. All right, guys. Google bouncing this morning, although the Nasdaq is falling down here, chat. Microsoft bounced a little at the opening bell too here, which is strange. What's falling? It's not Apple. Is this Meta? Meta's falling at the opening. Apple's actually slightly green though. But a lot of stuff fell deep right before. Palantir's bouncing up to 68. Do you buy here? Alright guys, so this is a challenge account, right? So we're going to wait 5 minutes to pass until we trade our actual account. So I'm going to buy this and then maybe add to it. Very risky. Don't copy me. Not an investment professional. All right, we're going to sell. And we're going to get out there too. So we just made about $125. Very small. Y'all be careful today, man. We're going to start with one contract, add to it. And if we fall down quickly, we're just going to sell. Which I think we need to right now. Yeah, I got to cut that too. That's a big drop. All right, so we're gonna wait now. Again, this is a challenge account, by the way. So we're trading this first couple minutes. Do not copy me. We're gonna trade much different than our actual funded account, which we're actually green on everything here. So we're gonna buy this now. There we go. There we go. All right. Cool. We're up about 400 on this. We got this dip here. Look at that support level hold. You love to see it. Still very early though in here, chat. So I would just be very careful right now. You know what? We'll switch to our actual funded account here though. But we are also gonna just be very, very, very careful in this thing, man. Very careful. Palantir's ripping. Yeah, Apple's flat at the opening bell. Nvidia's a little different though. I would be careful too if we start to crack this level here and like the redness continues. Palantir's rebounding though. Apple's starting to turn here. Very flat. I think the market's kind of on hold waiting. So just be careful. Waiting for the first few minutes to pass. We're right at the bottom of the range here. Testing these lows. Market retraced a lot. Let's see what happens. All right, I want to show you guys me potentially getting funded on Top Step here. So, yeah, so we are almost there. So we need about 100 and what am I at right now? We need about $120 left to get funded. So we're going to trade one micro contract and see if we can get funded here, and it'll be a live funding if we do. So we're so close to these lows, but I'm worried about a rebound back up and some stuff here. But look at this low break here. Let me put some music back on. Hold on. Yeah, there's a low break. It doesn't mean anything yet, though. I'm looking at Apple, and Apple's one of the reasons the market's breaking down. Palantir is green on the day. And so it doesn't mean anything yet. It's one of the reasons I'm not shorting necessarily here. What do you guys think? Do we keep going down? It looks red. So again, I'm waiting, but... All right, so we're almost past that time where we're going to trade our regular funded account. How many wants to buy? Look at this level hold here. I'll play with it, but we're going to take one contract here. Just one. And like if we get green, we can add to it. But there we go. We'll add a little bit here, but I got to be very careful. All right. Okay, we just made about 70. So we need like $40 left here, and we're funded. Let me see if we can get it. Hold on, where am I at? Yeah, we're at 940. The question is, how do we deal with 850s here? I'm gonna try to buy it, but it's risky. There we go. Do I want to add to this? I guess I'll try. We need like 60 bucks here, so I just gotta be careful. If we start to turn out, I do not want to hold this. Yeah, I do not want to hold that. All right, so now we need 170. I gotta draw some levels underneath this too. There we go. That's one. See, the problem is, like, now that things are starting to turn, the momentum's definitely on the downside. So the level is here, right here. I can try to buy my level here. It's risky though, guys. It's definitely risky. My bounces have been on point though at my levels here, even if it doesn't hold. Ugh. I'm nervous holding along here at all, but it's all right. We'll cover. All right, kind of going back and forth here. Yeah, we need $80 left. Honestly, the bounce levels that I've been drawing have been, you know, I'll take it. But with how much red momentum's here, I'm definitely nervous about these. All right, so now we're coming back up. All right, we're gonna short this now and maybe add to it. See if we can get that last little 70 bucks or so. Kind of get squeezed out here though. Take 3. I'm gonna limit some of this size just to protect the trade. And then add to it if we get green here, but there we go. There we go. We need $50. $20. All right, I'm gonna cut it. We need $40 left. We'll short this. Ugh. See if we flush down some. We need $15. Not quite there. I'll short here. There's 10. Now we need 12. Just didn't quite get it. All right, we made it. We just got funded in it. All right, so that's our 5th funded account, just to put this into perspective. I'm going to switch over to my regular account. That's my 5th funded account here. And now we are cracking lows right now, chat. We are cracking lows down. Look at this. Momentum's definitely on the downside now. That's why we started shorting here. Yeah, Top Step gives you a 50K demo. If you can make 3K in profit without losing 2K first following their rules, they fund you 50K with a 90% split. That's what I just did. I got funded in another one. I built up 1,500 one day, and then 1,500 today is what I made in that one. You can't make more than $1,500 on any day. And so you got to make 1,500 one day, 1,500 the next if you want to get funded in 2 days using it. But it's really useful. Great way to learn how to day trade. And if you're good enough to get started for less, you can get funded and then withdraw your own account. They pay out 90% once you're funded, as long as you follow their rules and conditions. No PDT rule. A lot of other stuff you want to check out and confirm with them. I'm not an investment professional, and they're an affiliate of mine, so I am biased in their favor because I get paid with them. I can't confirm anything. You want to check it all out with them first. Here's the link. Great way to help support the channel. I appreciate the love. Thanks so much. But there's the link in chat right now if you want to help support us. I don't even claim to be a good trader. Don't copy me. But we are breaking down here, chat. We are breaking down. And you can kind of see how I use some of my levels here. I don't know if this one's going to hold, though. Here's 700s right here, so we actually could bounce at 7s. But it looks like we're just breaking down. Do we rebound from here, chat? Let me know what you guys think. The red is continuing here, guys. Wow. Where's the lows? Hold on, let me see. Let me find the low on the Nasdaq here. Where's it at? All right, so the low on the Nasdaq, the level in which you want to be very, very, very careful with is 16.5s. We're at 16.7s. Where's the 2% rule based off of circuit breaker levels? Where does that kick in, guys? Because we're getting pretty freaking close. What is it? 7% relative to the previous closing price, right? The previous closing price on the NQ is currently 17.48. 17.48. If we're looking at it on a percentage basis, though, hold on. I think it's like 17,483. We were down to 16.7s. 16.7. I'm gonna look at 16.5s. Okay, so 16.5s would make it about 6%. All right, so in that regard, the level would be, okay, a 7% decrease in the Nasdaq 100 relative to 17,483s would be a decrease of $1,224. So 16,250, 16,260 is the 7% rule, which is right here. So if we break this level here, guys, 16,260, that's 7%. If it's the S&P, though, we got to look at the S&P, right? So the S&P, that level is 5074. And it's the S&P that halts the rest of the market. It's minus 355. Minus 355. So 5074 is where the S&P closed. A decrease of 355 means that if the S&P hits 4719, it's currently at 4875. If the S&P hits this level here, it gets halted, guys. This level here. I'm gonna make this red. I gotta make it red, right? This big brutal red. I guess it's already red. If the S&P hits this level here, chat, it gets halted. Starting to rebound back up, though. So we got to watch the S&P today based off of that halt profile here. Yeah, look at my 670 level hold here, man. Wow. We actually bounced right off of it. Oh, dude, I busted my nose at jiu-jitsu on Friday. It still kind of hurts, dude. All right, so we're going to try to scalp this real quick. All right, just made a little gain here on the actual funded account, a little $15 bill. We'll take it.
Hey, I'm Clay.
Yeah, sorry, I was wondering what happened to Clay Trader. I used to watch this guy. He used to say the same thing, $15 bills. Interesting. The OGs remember Clay Trader. Anyways. Alright, guys, look at this. We tapped 19. Look at this. Dude, my levels. I'm just saying, they're the top 3 greatest levels of all time. The markets honestly followed them pretty closely. Look at this. Top 3 greatest levels of all time. Honestly, that dip buy I got in was right here. And then we drew most of these before the open, just by the way, just to clarify. Does Jerome save the day now or what? Alright, so we tapped 16.96. Now we're ripping back up. This is why I don't ever do the retest. Like if we retest a specific level, I'll leave it alone. Next level is 17,000. We're trying to get over 17K. I think I gotta short this, right? Oh, I clicked it. I clicked it. Oh no, man, I missed it. Oh, dude, I'm kind of mad about that one. I clicked it. I would have made money on it. Oh, dude, I don't even want to look at the chart right now. You heard me click it. I just didn't actually click it, I guess. I thought I did. Now we're on the retest, so I can't really do it now. Oh, it hurts. I thought I clicked the button. I just kind of missed the click. GameStop ripping up 2360s. Looks good. Google ripping up. Apple ripping up too. Yeah, this is why I don't ever play the retest of it. But I'm gonna have to draw some levels here now, though. Here's the 200 EMA level. Kind of want to short, but it's also risky. I'm gonna wait. Yeah, the problem with the AMC, GameStop, all that stuff is that, like, I can't. Here's my issue with GameStop. Regardless of whether I want to support the retail industry or not, and I do, if I have to pick big banks versus retail, I'm rooting for retail. The problem, though, is that it's hard for me to vision a situation in which GameStop succeeds long term. The actual stores. It's hard for me to envision GameStop, like a way in which GameStop succeeds long term. Outside of closing down boatloads of stores to to like fix margins, it's really hard for me to. And I want to support the GameStop like community, I really do, but just it's hard for me to envision that. Yeah, I gotta just be realistic sometimes there. All right, market's still pushing up, though. Is it time to stop this push, though? You know what? I'm gonna short this here. Might be kind of risky, but that's all right. I'm gonna add to this begrudgingly. Let me get out half of that there just to protect the trade. Could have been a worse trade for sure. But we're just kind of moving up here. We're over the 200 exponential here, so I do want to give it like a little chance. But I'm gonna just go ahead and get out here. So we're down like 50 bucks on the day. I'm gonna switch the account though. I don't really want to risk too much here. We'll get into a different one. I'm trying to not honestly trade this rebound very much just because it's too kind of risky, if that makes sense. Yeah, and again, like we'll see if we get some dips or pullbacks now, but the market's gone right back up to where it's very strong. So I still kind of want to short this though. What is the Fed meeting today? So they scheduled this Fed meeting on interest rates. I'm back green in the other account too. Sometimes I trade off stream whenever, like just to show you guys. Here's the account. Like we just made a quick little $200 there. So we're green on this account. You can see the green on the top. But the meeting today, they scheduled it on on April 3rd, the day after April 2nd, when the markets were chaotic. And so they're going to be talking about interest rates. It's not an emergency meeting. The question is, are they going to talk about an emergency rate cut? Is the big question. And I'm not sure yet. But again, they scheduled this on April 3rd. If you look at when they scheduled it, at least according to some sources that I have, maybe I'm wrong too. I don't know. I might be wrong. And now look at the market come back here. Am I sure about what? Yeah, a lot of people are going to be waiting to see what the outcome is of this. All right, I'm going to take one contract here. And then I'm going to immediately cut it because somehow... All right, we're going to short the top here and then maybe add one contract to this too. But there we go. We're going to take two. There we go. Cut piece. Get a little bit more here. Not really making too much from this trade. I mean, we're up $70, almost $100 on the day. I wanted to short this level here, and it looks like I should have held it, but it's all right. Are they going to hold a press conference? I don't know if they're going to do a press conference. They'll probably just announce what they said during it. All right, markets are still churning up. Again, I've kind of paused. I don't really like longing here because of the stuff going on in markets, but I also don't really like shorting it either because it's too strong. And so I don't know what to do here, bro. I'm just kind of like trying not to do anything. All right, look at the market pumping. This is actually a big line in the sand level right here. This 280 level. Yeah, we just ripped past it. Look at this angle here, man. Wow. Yeah, again, I'm kind of trading small. I mean, I'm green on the day. You know, day trading. I'm flat in my other positions. I haven't really bought up anything yet. So just be careful. Market's still just churning up too, man. S&P's about to hit that $5,000 level. Look at this level here, this 5K level in the S&P. That's a big level too. And so we'll see what happens. All right, so we had the U.S. employment trends data came in at 109 versus 108.50 previously. And the UK PM Starmer says it would be wrong to move away from the U.S.-UK special relationship, need to step up to the tariff challenge, end quote. Execs from Bank of America, Barclays, and Citigroup were among the participants in a weekend call to discuss the U.S. tariff blitz, according to some news outlets. Rate cut confirmed? No. Rate cuts aren't confirmed. Like, even if we look at the odds right now, like, you want to know what rate, like, listen. Let's talk about it, all right? So, every single time, we get a rate decision. You get somebody that wants to be contrarian 30 minutes before the rate decision is announced, and they're making something that's like a 5% likelihood bet. They're like, yeah, we're going to cut rates today, when it's like 95% likely that we pause. Please ignore people like this because they genuinely, truly have no idea what they're talking about. They're so desperate to be contrarian that they ignore logic. All right, if you want to know what the rate cut likelihood is, look at the CME watch tool. This might change. What the current rates outlook might, what it shows right now, this might change. But if you look at this the day of the Fed decision, it's almost always right. It's almost always right. Even still, as of now, you can watch the change in interest rate sentiment go back and forth. depending on what's going on in macroeconomics in the country and geopolitical stuff as well. Currently, right now, it's pretty split down the middle. We got about a 45% chance that by May 7th, we're going to cut rates 25 basis points. Either before or during this meeting, we're going to cut rates about a 45% chance likelihood that we're going to cut 25 basis points. As of now, about a 55% chance likelihood that we're not going to change rates at all by then, and that we're just going to pause rates, keep them the same, not do anything with them. That is the current, sentiment. That is what we're looking at. And so, yeah. And we'll see what happens, chat. We'll see what happens. Still very early in the day. We still got a lot of stuff coming out. They do have the 11:30 Fed meeting. It's 10 o'clock now. In an hour and a half, they do have the 11:30 Fed behind closed doors meeting, discussing rates and stuff like that. So we'll see what they say during that meeting. Who knows? But yeah, that's what's going on right now. Yeah, yields. Taking a look at yields. Yields up to 4 point. You move the decimal place over. If you look at TNX, it's 4.07%, basically 4.1% for 10-year yields currently. Yeah, right now, honestly, the market's back. The market's green since the opening bell. Here's the S&P right here. So, I mean, here's where we closed. When was this? Friday? And then here's where we are right now in the S&P. So that's what we're looking at, chat. Ooh. Ugh. All right, guys. Stagflation? We'll see what the inflation data shows up this week. We'll see what it looks like. And again, if you haven't already, check out TopStep. We are green and everything today, so that's good. We got funded in another account. That's 5 funded accounts. We'll take some larger swings later on, but right now it's just kind of iffy directional wise. We'll see what happens. And listen, if you want to check them out, great way to help support the channel. They are an affiliate of mine. I am biased because I get paid by them, but it's really useful to learn how to day trade this way versus funding your own account thousands of dollars and losing that. If you pass their challenge, you get a 50K funded account for the base one. You can, if you do the top one, you get a 150K funded account, 90% split. You get to keep your first 10K in profit. Very similar to funding your own account. If you fail, you're out $50. Not the end of the world. Great way to learn how to day trade. If you want to check them out, here's the link. They are an affiliate of mine. I am biased. Remember, not an investment professional. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Don't copy me. And yeah, I'm going to get out of here, guys. Listen, I love you all. You'll have a great day. Be safe in these markets, guys. The market is very, very, very volatile right now. I'm going to get out of here before I lose any more, before I lose money. I'm green. I'm going to ride out into the sunset green. I'll see you guys later. Y'all be good. Have a great day.